Hello, everyone, and thank you so much for joining us today. Super excited to have our panelists with us. Today, we're going to be talking about the new HMRC rule that's coming into play in April 2026 that could put HR, finance, and procurement leaders directly in the compliance firing line. Our goal is to break down what's changing and how it affects your organisation and what you can do now to prepare for the new legislation that's coming into play without getting lost with all of the technical jargon that comes with speaking around compliance. I'm so pleased to introduce our panelists today. We've got Rebecca Seeley-Harris with us, who is the employment status expert in IR35 and off payroll. We've got our very own Rusty, who is our General Counsel and VP of Legal and Compliance. And at the end of the session, we'll be joined by Annetta, Director of Compliance Programs at Worksome, to answer your questions. So be sure to drop them in the chat throughout the discussion. But let's kick off with some background from Rebecca.
Yeah, I think, first of all, this was a consultation that went out in 2023 because this is, the umbrella industry has needed some attention for quite some time. And actually, I started off my journey with the umbrellas running a campaign called the Fair Umbrella Campaign. And that was for the regulation of the industry. Now, what's come first is the tax policy. So the regulations are actually going to be consulted on in the autumn. But this is a change in tax policy. And the reason this has come about is because there's been a couple of cases, one called DUCAS and one called PPS Umbrella, where a lot of money has been diverted into the businesses' pockets rather than being paid as employment taxes. In the case of DUCAS, it was 171 million. That went missing. What basically happens is you've got an end client. In this case, it was the NHS, and then you've got the recruitment company, and then they pay the umbrella company gross. And what was happening is that the umbrella company wasn't paying the workers as employed; it was paying the workers off payroll, either through a personal service company or as self-employed. So obviously, the government is looking at this situation and thinking, we've got to do something different. The Conservative government had chosen mandated due diligence, but when the Labour government came in, they decided that they wanted to go for something called option 3, which is deemed employment. What we've ended up with under the draft finance bill is joint and several liability under the new Chapter 11 NITIPA, and this makes the relevant parties under the legislation, and that can be the end client or the agency or indeed an MSP, depending on who is in the direct contract with the end client. It will make them liable. And when I say joint and several, I don't mean joint or shared. It is joint and several. That means that HMRC can basically go after anyone in the chain for the full amount of PAY that hasn't been paid by an umbrella company.
And in regards to the definition of an umbrella company in the legislation, what does that look like?
Well, it's quite interesting, actually, because if you hear this definition and you exclude the word umbrella company, it could actually apply to a number of different entities. So basically, Section 61Y says that if the worker is employed by a third person, and the third person is an entity in the business of supplying labour, in which the worker has no material interest, and the worker's personal services are provided to an end client via that company or umbrella company arrangement, then each relevant party in the supply chain is joint and severally liable, along with the umbrella company, for any PAYE amounts which qualify as an umbrella company payment. Now, the reason I mention that is because it's transpired, actually, that if you've got an agency that is employing a worker, and that means on a contract of employment, and the agency is running the payroll. So, for example, the agency might decide to bring the umbrella worker in-house, put them on PAYE on a contract of employment. In that situation, Chapter 11 still applies. So it's not just umbrella companies.
So sticking with the definitions of umbrella companies, I've heard the term purported umbrella company. Could you expand on that at all?
Well, yes, I think this is a situation where if you said, if it looks like a duck and quacks like a duck, it's probably a duck. And, this is the same situation. So there have been umbrella companies who have sort of held themselves up to be an employer, but then have funneled the gross fees that they were given off to the workers as off payroll. So they paid them either through a personal service company or through being self-employed. And that is exactly the situation with Ducas and also with PPS Umbrella. Because in both cases, you have a group of companies, which these companies are part of, and they will have paid them through perhaps a subsidiary. The problem with that is that the end client thought that the worker was being employed, so they would have paid employment taxes. So the purported umbrella part of the legislation is trying to catch that scenario. The difficulty is going to be that the legislation actually says that if there's a reasonable supposition and an assumption that this company is basically up to no good, that they're saying that they're employing the worker, but actually they're not, and then there's a shortfall in the Ducas case of 171 million. That's the scenario that HMRC is trying to catch with these companies that are holding themselves out or purporting to be an umbrella.
Rebecca, we've spoken about definitions of umbrella companies, we've had the term purported, etc. Employment business is another definition that I think probably is worth us clearing up. How would you display that for us?
Well, this has always been a difficult one within the industry. So very basically, the employment business deals with temporary workers, but it's not temporary workers on contracts. So on temporary contracts. So this can be a contract of employment. So it's the employment business that's dealing with sort of temporary workers, if you like, and the employment agency that's dealing with permanent workers. That's a very basic definition, but that's probably as a good rule of thumb.
Sticking with definitions, you mentioned the term joint and several liability, and that's used throughout the legislation. What does that mean in plain English, right? For someone in kind of HR and finance that might not be, an employment law specialist, how do we kind of put that into layman terms?
Yeah, so it's really important to understand that it is joint and several. As I've said before, it's not shared, it's not joint. And I think a lot of people are sort of being confused by those definitions. Joint and several means that HMRC can go after one or either party for the whole amount. So if it was a shared or a joint liability, then it would be in proportion. So it may be the HMRC could go after one party for a certain amount, much like if you're splitting the bill at a restaurant, If you're sharing it, then you might pay your amount, but under joint and several, it means that HMRC can, without having to transfer a debt, I need to add, go after either the end client or the agency for the whole amount of PAYE. Now, obviously, we're going to be in a situation where the agencies or the end client's going to start doing a lot more due diligence. So you would hope that it's perhaps a shortfall that they're now going to be liable for. But basically, you have to understand that you are liable, the agency or the end client is liable for the whole amount.
You're demonstrating there through the definition of who is liable, but just to kind of deep dive into exactly who is on the hook now, I guess that's end clients and recruitment agencies. But I'm going back to umbrella companies. What does the impact on umbrella companies look like? Like, what will they need to do to demonstrate compliance, and how will they operate differently now?
So obviously, you can start with the accredited umbrella companies. There are various different organisations that accredit them. Also, things like payslip checking for the workers, because we've got to remember the workers in all this, and payslip auditing in real time. So there's a couple of different services that provide the payslip auditing. There's also lots of things you can do in the background. To be honest, these things should have been done all along anyway, but things like checking with Companies House to make sure that there aren't multiple companies being under the same directorship, for example, and making sure that they are submitting the correct returns to HMRC. You can also do checks online. You can Google them. You can see whether they're on the name and shame list from HMRC. There's quite a lot of checks that you can do, and you will have to do to make sure that your company that you're contracting with is compliant.
Does that change for recruitment agencies and intermediaries like us, like Worksome? Does that due diligence obviously has to be followed in that process, but can you see there being any changes between umbrella companies and intermediaries and agencies?
Well, I think what's interesting actually is what I've been working on the last week is the interaction between Chapter 11, Joint and Several Liability, and Chapter 7. So Chapter 7 was the original agency tax legislation. There's been quite a lot of sort of concern as to which one will apply, because the agencies typically will have been engaging a worker perhaps under a contract for services or a worker contract. Now that would come under Chapter 7 under the agency tax legislation, because that's what's called deemed employment, and deemed employment is specifically excluded from Chapter 11. So first of all, you've got to establish how the worker is being engaged, whether the worker is being engaged under a contract for employment, and there's a specific definition of employment both under Chapter 11 and also Section 44 of ITPA. So employed for tax purposes means that there is a contract of employment and that there is an employment relationship, as well as PAYE being paid. But there are, as it turns out, certain scenarios when there's something called the elective deduction model, where an organisation might be paying PAYE. They say that this is an election. You can't elect to pay PAYE. It's either due or it isn't. And then the worker is put on a contract for services, a self-employed or a worker contract, in which case that wouldn't come under Chapter 11. So you've got to establish how the worker is being paid. How that's going to be sorted out by HMRC, I'm not quite sure. But not also remembering that this is draft legislation, so it may change between now and April. So having established that, then obviously the recruitment agencies will need to factor in all these compliance methods, whether it's accreditation, looking at the different auditing tools, for example. And I think, once this is done and they've established who their sort of partners are who can comply with all these rules, then they will have a PSL, I guess. And they will you need to have a better relationship with your umbrella company to make sure that there is compliance being done. And this is on an ongoing basis, not just a kind of like check it once.
Okay, thank you, Rebecca. I guess that covers everything umbrella, intermediary, agency. The most important person can be the worker. So is there any kind of real impact here for the worker and the way that they need to create a shift? Or is it just be aware and try to be clued up as you possibly can within this process?
Yeah, I think the most impact that it's going to have on the worker is in the umbrella company regulations, and these are going to be consulted on in the autumn. So that there's going to be dramatic shifts, and within that, there will be things like holiday pay and salary skimming, for example. Those regulations will cover that. The tax policy should not impact on the worker, but it should actually make the labour supply chain more compliant, which should then have an impact on how the worker is paid. So, for example, with the loan charge, which is a very old problem that was in the labour supply chain, where HMRC would pursue the worker for the tax. Under this tax policy, that they're not going to be pursuing the worker; they will be pursuing either the end client or the agency. So it's more about the fact that the compliance, there will be more compliance within the labour supply chain, rather than it having a direct impact on the worker.
Right. Okay. Makes absolute sense. And you've mentioned, the autumn, this will be reviewed, etc. What do you think the kind of next few months look like in regards to the scope of this coming in April? What do you foresee happening from now until then?
There's going to be a lot of changes within the umbrella company market. I expect there'll be mergers. I expect the recruitment companies will start using the sort of bigger umbrellas. Hopefully, I'm actually a judge on the contracting awards, and we've just judged it. And, there are some excellent umbrella companies, very good employers. And it would be a shame if we were going to lose those. But, the government has been listening that's why they brought joint and several liability in, because actually, initially they were going to go for what was called deemed employment. And that would have been, the liability would have been with the PAYE scheme would have been with the agency, which would basically have sort of knocked the umbrella company out of the labour supply chain. But the government's recognised that they are good, the umbrella companies are good employers. So hopefully if you've done, the agencies have done their due diligence, then they will be able to work with any size of umbrella company, because bigger isn't always better. But there will be shifts within the labour supply chain within the umbrella company market. So hopefully we end up with the best ones.
Right, makes absolute sense. Okay, thank you so much for that. Just going to move my attention to Rusty and ask you a couple of questions, if I may. Look, for HR and finance leaders who may be hearing about this for the first time, they may be super concerned, worried that a new piece of legislation is coming in. What does that mean for them and their day-to-day operations? I wonder if you can just take us through how you see there being that change.
I think it's most important not to panic at the outset. This is something that we're all understanding what the scope is, what the current landscape is. And as Rebecca's already mentioned, this is draft legislation. So we do expect there could be changes in implementation between now and going live in April. But I think for those people in the business who are already paying attention, that's a very good sign. I think that the expectations of looking at the labor supply chain and looking at the providers who are helping to deliver payments to the workers who are rendering services, it's really a good measure to ensure that those are good actors, legitimate companies, that there's basic steps toward ensuring that there's due diligence and reasonable care applied to who's involved in this. And when we're handing money, not just to assume that it's going to hopefully end up where it's intended to land, and to really think thoughtfully about who the partners are that people are engaging with. So I think at this stage of the game, it's really important to take a step back and evaluate what the landscape is.
And I think, whenever there's new legislation that comes in and we mention more due diligence, that usually means there's going to be a lack of speed, right? How does that affect processes in a way? What does that mean for contracts, onboarding, due diligence? Is there going to be more of that? What do you foresee?
Well, I mean, I'm certainly not a fortune teller, but I think what we're seeing in terms of activity is we have clients who are now beginning to look at their contracts with us. We're a technology that's intended to reduce friction in the process, and we're intending to help clients engage in a confident and compliant and assured way with workers that they want to contract with. And so, if they're going to be looking to us to help deliver solutions, we're also looking to our partners to ensure that those solutions arrive. And so really, it's exactly what Rebecca shared before around the quality of these providers. It really makes a difference. And so, what I think people will be doing is looking at not just how can I shift liability, but how can I make sure that there is a reputable quality of service that occurs throughout the process. And I think as a legal practitioner, I view this as raising the bar for everyone. There is a tax shortfall that's occurring. There are bad actors, whether intentionally or unintentionally, that are in the market, and those should be looked at. They should be scrutinized carefully. And so I think that this will give workers and companies both a better outcome. Now, what it means in the very short term is I think that there should be a contractual review. Clients who are hiring for services should look at their agreements with the providers that they have and ensure that there is proper responsibility assigned, and recognizing that if we're going to expand the scope of liability and risk, and now clients could be held for something that happens down the chain, let's make sure that we have a process in place, not only to vet them at the outset, but to make sure that operationally through real time that there's information that's available, that's responsive, and that there's a relationship there that's based on, again, that high quality of service and expectation. I think that will raise the bar for everyone.
So there's lots of people involved in some of these kind of supply chains, should we call it? And I think that, there's multi-layers, there's suppliers, there's PSLs involved. How will this affect organisations that are larger, right? More enterprise clients that have a plethora of involvement, as Rebecca has mentioned, around building PSLs, etc. What are some of the challenges for those larger companies that may have multi-layered supply models?
Well, I think the biggest challenge is they'll have to do an evaluation of their full labor supply. Where are these workers coming from? And I think in the past you've been able to hire VMS and MSP and different partners to help act as intermediaries as a way of localizing talent and shifting some of this responsibility. But if you expand the scope, really, in theory, the risk concentration can rise to the top. And from that perspective, HMRC may want to skip some of these intermediate layers and really just pursue the most likely target that has the ability to pay. So from that perspective, I think from very large layered multi suppliers, they're going to have to really look at the full map and create a census of the work that's coming up the supply chain. I expect that we'll see those that have multiple umbrella companies, down the chain. You might see consolidation. I think that they'll be looking at shell structures and really questioning to make sure that there's legitimacy throughout. Looking at mismatched numbers for ERNs. I think all of this will be the byproduct of this evaluation. But I think that from now, it's really quite important that large organizations really look at the full broad scope of the labor supply chain and evaluate what's currently happening underneath them.
All right, thank you so much for that, Rusty. Moving my attention back towards you, Rebecca, let's talk about the risk and responsibility in the supply chain and where actually the liability sits. So the law is described as absolute liability and cannot be disputed, which, sounds super scary. But can you give me some insight on exactly what that means for businesses and agencies?
Yeah, so it's a strict on absolute liability, which means there's no defence. In other legislation, for example, in Chapter 10, which is the off-payroll working, you have a defence, reasonableness defence. In this piece of legislation, there's no defence at all. So you can do your due diligence, but you can still be held liable, and you have to, take that on board. And there's reasons for that, because HMRC have to make sure that they close down on these very large scale frauds. So basically, the liability will sit in, if there's an umbrella company in the chain, it will sit with the top agency, or actually, if you say top entity, because that could include an MSP. So if the MSP is in direct contract with the client and they are providing the services, then they will be the party the relevant party that's liable. If there's no umbrella company in the chain, then the end client will become liable under the joint and several liability. And as I've explained before, you might have a situation where the agency takes on the payroll and the worker is on a contract of employment, in which case the end client might look at that situation and say, well, I don't want the liability. So they might insert an umbrella company back into the chain, because then that puts the liability back onto the agency.
Rebecca, how does this intersect with the definition of employment business?
Oh goodness, yeah. I've been having some conversations about this as well. So employment business is under the conduct regulations, the conduct of employment agencies and employment businesses regulations. That is under the Department of Business. That is not tax policy. So it's causing a lot of confusions, because obviously you've got a difference between employment agency and employment business under those regulations, but that will be dealing with the umbrella company regulations, which are going to be consulted on in the autumn. This, the definition you have to look out for is under Section 4 ITPA, which is employment. It's whether the worker is engaged under a contract of employment or a contract for services. If it's a contract for services, or actually if it's a LIMBY worker under employment rights, then it will come under Chapter 7, not Chapter 11.
Thanks so much for clearing that up for us. I'm sure you can see there's there is some slight confusion when it comes to the kind of definitions. So I've definitely been having some conversations on my side around how that intersects. So thank you.
It's not an easy field.
No, it's not, right? I think whenever there's a liability shift, and as we've already mentioned, this is probably one of the biggest in the UK in years. I think it's super important that we have this conversation. So thank you for that. Rusty, moving back to you here. When we talk about being audit ready, what does that actually look like under this new model? What do people have to prepare, and what do you foresee kind of being any changes as part of that?
Well, I think in short order, it really accelerates the pace at which information needs to be available. Audit readiness really needs to mean that every link in the supply chain should be able to produce, contemporaneous and complete and verifiable evidence that JY has been processed and paid. And so that will require, again, at the outset, when you have parties that are going to be processing PAYE taxes, that there you have ERNs, that we have real-time information available, and that this, the goal is within 24 to 48 hours of HMRC request, the company should be able to produce verifiable information that demonstrates that was completed. And so it really moves up from a reactive to a proactive posture.
So that's pretty short notice, 24 to 48 hours to be able to do that. So, what type of documentation will they need to provide specifically within this?
Well, there's a whole list of information, but at the basic level, I mean, as Rebecca, in one of your examples, when you're sharing that the companies may not even know who the employer, the ERN is, where the taxes should have been or were paid. That information is basic. We need to be able to show from the top to the bottom, where the taxes were withheld, where they were paid. But what we try to do from Worksome side, what our technology is intended to do, is to provide clarity and access to all that information, so that companies would be able to export and verify and audit information real time for all the workers that are engaged, that are placed onto payroll or working through an umbrella company. And so we will be only working with those reputable providers that can adhere to that, where we have real time access to data and can produce it from request to output in the various forms that would be needed, so that companies have a high degree of confidence. So from our side, audit readiness also means tightening controls. It really means screening and pre-screening and verifying on an ongoing basis anyone who we're going to allow our clients to engage through us to deliver the umbrella service to workers. So I think, audit readiness, it's a high bar, but it's also one that I think companies and any intermediary who is in that chain should be able to adhere to.
I mean, gaining that end-to-end transparency, the kind of term being audit ready, I guess it's a little bit too late, right? When you're getting 24 to 48 hours notice to suddenly go, right, okay, where do we find this stuff? So I guess technology can really help being able to, you should be audit ready at any time effectively. And with technology, it is going to give you that ability to have real-time insights, live dashboards to be able to understand what that end-to-end process and how that transparency flows all the way from, right at the top end where the liability sits, kind of as Rebecca said, all the way through to the worker and how they're getting paid. So
right, and Jake, I would just add to that that's part of the conversation we are currently having with the providers who we work with. We're looking at how do we link our technology. We as a system, a platform, can API integrate into other platforms to make sure the information is readily available, it's secure, that we have really high standards of data protection, but also readiness. And that's where it's very important that companies, providers, anyone who's involved in this, that they're looking ahead of time, so that we're not waiting for this to go live and then try to play catch up. We want to get ahead of this and prepare ahead of time for really making sure end to end that we can deliver on our promise.
Yeah, makes sense. Yeah, less being audit ready and more ready for an audit at any time. Right? Okay, perfect. Well, thank you so much for that. Look, final question to both of you. Look, if someone only does one action from all of the information that we shared today, what's the most important thing that they can do to protect themselves? Let's start with you, Rebecca.
Well, I mean, unfortunately, it's not going to be one action. I mean, it is compliance if that's the one action, and there's all the things under the compliance that you're now going to have to do. But there are a lot of tools out there now. Worksome being one of them. That but in terms of things like verifying pay slips, you've got the tools that will check pay slips in real time, because you've got to look at what the risk is, and the risk is actually fairly identifiable. Because if somebody sort of starts veering off the PAYE that should be paid, it's pretty easy to check. If for example, this elective deducted model, for example, they don't pay holiday pay. So if your pay slip doesn't have holiday pay in it, that's a red flag straight away. So I think perhaps identifying the red flags that show you that there is an abnormality or a non-compliance that you can check straight away. And I think also understanding the payroll legislation.
Right.
The point being that with payroll, there are some very sort of strict deadlines, and you need to make sure that your umbrella company provider is complying with those strict deadlines.
Yeah, keeping sight to the timeline. Rusty, on your side, one thing that someone can do that's the most important thing?
Well, I think that the best thing is to start looking at where people are being engaged from your company. Look at those layers that are there, because this risk is real, and joint and several liability means that you can't just delegate, you can't shift liability, and you can't really rely on contractual remediation to say after the fact that we're going to hopefully recover the losses that would be there. So it requires companies to take a proactive stance and make sure that you have the correct partners, that you have the correct information, that it's available in real time, and that it's kept and maintained in a way that you can have access to it. There's also post-engagement requirements to preserve that information, and so it really means that if you have the potential risk of being liable for another party's non-compliance, do your due diligence ahead of time and keep up to speed on it.
Thank you so much for that answer. And thank you both so much for today as we kind of bring this to a close. But just to recap before we do move to a Q&A, I think there's a few real key points that people can pull away from today's webinar. And, just to start, joint and several liability means risk has shifted upstream. HR and finance leaders are now in scope, is the long and short of that. April 2026 may feel like a long way away, but as this summer seems to have flown by, preparation needs to definitely start now to be ready for April. And due diligence, documentation and supplier visibility are non-negotiable under these new rules, right? We've used the term absolute liability. And I think, as much as compliance and legislation can come with some confusion, I think we've been super, super clear on where the liability sits now and what action people need to take. So we've covered a lot now, but here's your chance to get your specific questions answered by Aneta. Thank you so much for joining us, our inside expert on all things UK compliance and umbrella reform. So please, as I've said, put your questions in the chat if you haven't already. But apart from that, thank you so much for all of us.
Thanks very much.
Thanks, Jake.